Welcome to the Maryland Mortgage Rate Weekly Mortgage Market Update for the week of October 21st, 2013. Hello, I'm John Thomas with Primary Residential Mortgage here to give you an update. Well, last week was a good week for mortgage rates. Mortgage rates actually were able to creep lower again. They've been on this move lower since the government shut down, and even though the government's no longer shut down, we still moved a little bit lower. But if you look at the mortgage chart on the screen, you can see that we hit this 200-day moving average, and we've kind of sold off and closed below that. That is a negative short-term sign for mortgage bonds. And then we also have this double top trading pattern going on. If you look at the top on October 4th, we're right about there on Friday. And what that is traders may sell off because of the double top. And we also have the 200-day moving average. So short-term, mortgage bonds could start to sell off, move rates higher in the short term. So if you're closing in the next 15 or 30 days, we recommend locking your rate, take advantage of this great move lower in interest rates. Now, if you're closing 60 days out or longer, a new construction, certainly float, because we're looking to actually see rates move lower in the long term because of the government shutdown did have a negative impact on the economy. And tapering has now been pushed out till next year, so the feds are not going to talk about stopping buying the bond buying program. So all of this could help mortgage bonds in the long run. Short term, might just have a pullback from the traders, so lock that rate if you're closing in the next 30 days. Now, in the political news, the government shutdown was finally turned off. They passed a budget to keep the budget going until January 15th, 2014. Now, what did they do? Absolutely nothing other than kick the can down the road. Solve no problems. We're not really operating with a budget. We still spend more money than we bring in. We still have to borrow to pay our bills. So look for the same problems we had now coming back in January, not too far off, but for now, we're back to business. And then the debt ceiling that we were going to hit on the 17th, they passed something to kick that can down the road till February 7th. So we're still going to have to deal with the debt ceiling. That's where we can't borrow more than that. We're only, in debt $16 trillion, so no big deal there. Hope you detected sarcasm. So that is going to come back. All of that is bad news. That's going to help bond markets. That's why we're looking for rates to maybe move lower short term. And the feds can't taper now that they took a hit to the economy from the government shutdown. So mortgage bond buying program from the feds is going to continue till next year. In the economic news, the weekly initial jobless claims came out on Thursday, which came out at 358,000. That was below the 330,000 expected. And that kind of reversed this lower trend of jobless claims. You look at the chart there. Jobless claims have been getting lower all year, and now they've started to spike higher. And that could be because of the shutdown. It may not be. We'll have to see this week what the numbers come out at. And then in the housing news, the National Association of Home Builders released its October Housing Market Index, which came in at 55. Now, it's down from 57 in September, but it's still above the low for the year of 41, which we hit in April. Anything above 50 means home builders are still positive about the current conditions, so they're still looking to build. They still see favorable building conditions. That's good news for the housing market. The builders are going to keep building, so it's still a great time to buy, and that means home prices are still going to appreciate, so it's still a great time to buy. And in the USDA news, USDA announced that they are back to business, and they're hoping everything will be up and running on October 21st. They'll be able to take lender applications again, get them under in, and issue only conditional commitments, though, not a full commitment, because their fiscal year ended October 1st and they have not been refunded. So you got to be careful. Your lender may not lend on a conditional commitment. They may require USDA be funded again. Primary residential mortgage will fund the conditional commitment. So if you need to get your USDA loan closed and your lender won't do it, give us a call. We'll give you a rush. We'll get you done ASAP. 410-412-3319. 410-412-3319. We'll jump in there and get you closed. And then the eligible areas were supposed to change October 1st. Less areas in Maryland were going to be eligible. Well, good news. That's been pushed down and back to January 14, 2014. So all areas are still currently eligible. That's not changing until next year, so that's great news for USDA. And then in the local news, the next free first-time homebuyer seminar in Towson, Maryland is Saturday, November 16th from 10 a.m. to noon at the Baltimore Sheraton North Hotel in Towson. And you can register for that by giving us a call in the office at 410-412-3319, or you can register online at www.marylandhomebuyersseminars.com. Look forward to seeing you guys next week.